Join me as I challenge myself to learn the basics of the stock market in just 1 week and share everything I discover with you. The stock market is often referred to as the backbone of modern economies, but what exactly is it, and why should you care? Simply put, the stock market is a platform where companies raise capital by issuing shares, and investors buy and sell these shares in hopes of earning returns. It's a vital component of our economy, and understanding how it works can have a significant impact on your financial well-being. Many people shy away from the stock market because of misconceptions and fear of the unknown. One common misconception is that the stock market is only for the rich or for financial experts. The truth is, anyone can invest in the stock market, regardless of their income or financial background. Another misconception is that the stock market is extremely volatile, and that you'll lose all your money if you invest. While it's true that there are risks involved, the stock market has historically provided higher returns over the long term compared to other investment options. Fear of losing money is a significant barrier that prevents many people from investing in the stock market. This fear is often fueled by the lack of knowledge about how the stock market works and the various investment options available. Some people also think that investing in the stock market requires a lot of money, which is not the case. You can start investing with as little as $100. Lack of knowledge is another significant barrier that prevents people from investing in the stock market. Many people don't understand the different types of stocks, bonds, and other investment options available. They don't know how to read financial statements, and they're not familiar with the various investment strategies. This lack of knowledge can be overwhelming, causing people to avoid the stock market altogether. Stocks are essentially shares of ownership in a company. When you buy a stock, you're buying a small piece of that company. The value of your stock will fluctuate depending on the company's performance and market conditions. Dividends are portions of the company's profit that are distributed to shareholders. They're a way for companies to reward their investors and attract long-term investors. Market indices such as the S&P 500 or the Dow Jones are baskets of stocks that track the performance of a particular segment of the market. They provide investors with a way to track the overall performance of the market and make informed investment decisions. For example, if you want to invest in the technology sector, you can buy an index fund that tracks the performance of the top technology companies. Imagine you own a small business, and you want to expand your operations. You can issue stocks to raise capital, and use that money to fund your expansion plans. In return, your investors will receive a portion of your company's profits in the form of dividends. That's essentially how the stock market works. Diversification is a key insight that successful investors swear by. It involves spreading your investments across different asset classes such as stocks, bonds, and real estate to minimize risk. By diversifying your portfolio, you can reduce your exposure to any one particular market or sector, and increase your potential returns over the long term. Another key strategy for successful investing is starting small. Many people think that they need a lot of money to start investing in the stock market, but that's not the case. You can start with a small amount of money and gradually increase your investment over time. This approach will help you get comfortable with the investment process and reduce your risk. Successful investors also understand the importance of having a long-term perspective. They don't panic when the market fluctuates, and they don't make impulsive investment decisions based on short-term market trends. Instead, they focus on their long-term goals and make informed investment decisions that align with those goals. Understanding the basics of the stock market is crucial for financial growth and stability. By learning about stocks, dividends, and market indices, you can make informed investment decisions and take control of your financial future.